Hi everyone, welcome to my channel Wealth and Investment. So today the topic of discussion would be Sydney Airport SYD.AX. It is one of the Australia's most important pieces of infrastructure. If you haven't traveled to Sydney, you should obviously once the lockdown is over. And Sydney Airport, I believe, is a significant contributor to the local and the national economies. It generates around 38 billion in economic activity a year, and it has recently secured $850 million of additional bank debt facilities in order to further strengthen its balance sheet, right? As reported on 20th April 2020, the company had 430 million available cash, 1.75 billion worth undrawn bank facilities, and close to 600 million of new USPP bond market debt due to be funded in June 2020 for combined liquidity of around $2.8 billion. And this is in excess of the 1.3 billion of debt maturing in the next 12 months and the 150 million to 200 million of expected capital expenditure over the same period, right? Moreover, what is so interesting, what I find Sydney Airport interesting is because it's implementing a range of operating cost initiatives, at least a 35% reduction in operating costs for the next 12 months from 1st of April 2020. Besides security recoverable costs, the directors have decided to reduce their fees by 20% for 3 months, commencing 1st of April 2020 until 30th June 2020, and fixed remuneration of CEO will be reduced by 20% over the same period, right? Furthermore, Sydney Airport is intimidated that it is targeting a capital investment range of 150 million to 200 million for the next 12 months from 1st of April 2020. Um, on the 6th of May 2020, Sydney last traded at 5.52, which was down by 2.817% from the last close. And obviously, it's trading slightly above its 52-week high as of today, um, 14th of May, with price to earning ratio of 30.67 and dividend yield of 7.10%. I know its price has been largely impacted by the lockdowns and the airports are still shut down in Australia, but I'm looking at its figures and numbers as a long-term investor, as a passive investor, maybe for dividends, maybe for going forward in 2 to 3 years' time. And even if you look at here at its 1 year chart, you can see that the price was fairly high over the past year, except the months impacted by COVID, right? Which I believe will rebound soon whenever the lockdowns are, the world is going to reopen. It's not going to be like this forever, right? People are going to travel. And, given the globalized world we are in, people are so widely dispersed, they will be traveling back to their countries. The trade has to open. People have to attend their business meetings. Not everything can be done virtually, right? Moving on, as I mentioned before, that it has a solid dividend structure, and you can see here as well that it is ideal for passive investors and for long-term investors as well. Just a bit about Sydney Airport and its future, that it envisions itself providing a top-notch airport experience and boost the development of Sydney Airport, right? The stock, as per the trading update released on 20th April, Sydney Airport secured 850 million of additional bank debt facilities, as I mentioned, and the not so such a good news is that the board has suspended its half-year dividend distribution ending June 2020 and is planning to reduce operating expenses due to COVID impact and uncertain outlook ahead. As long as travel and social isolation restrictions prevail, reduction in traffic is expected to persist, right? Further border closures and containment measures have stranded Australian aviation, but it is one of the Australia's most important pieces of infrastructure, a significant contributor to the local and national economies, and it generates around 38 billion in economic activity a year. Sydney Airport recently secured, as I mentioned, the additional bank debt, which means that it will be expanding further whenever the lockdown is over. Um, the company has 430 million available cash, and it's also implementing a range of operating cost initiatives, as I mentioned above, which is good in the long run, that it is making sure that the company survives once the lockdown is over. So, as a, as a future and as a long-term investor, I believe that given these figures, once the lockdown is over, and given that it is, the price is a bit lower, for me, I would personally invest in Sydney Airport, and even if it goes further, I would do a dollar cost averaging, maybe buy more. When the lockdown is over, I think the price will shoot up because the company is already taking care of its operating costs. The company is already generating cash. Its liquidity position is also good, which is very ideal, right? Dividend, yes, going forward in 3 to 5 years' time, it will come back, and it's pretty solid dividend. So personally, I would really go for this stock. Thank you.